This week, we're going to talk cattle on feed numbers. Welcome to the Weekly Livestock Market Update on Brownfield. I'm your host, Meghan Grebner. With us this week is University of Kentucky's Kenny Burdine. Good afternoon.
Good afternoon, Meghan.
It is a good Friday to talk. Not only is it Good Friday, but a much better week in the markets, and we'll talk about that. We'll preview, or we will dig into those cattle on feed numbers. But let's talk a little bit about a little rebound in cattle markets this week.
It was, we've certainly had the volatility, and this was an up week almost across the board. The 5 market average fed steer price was up by just under $4 a hundredweight this week, $211.62 at the end of the week. April live cattle futures gained $7 from last week. They settled yesterday at $209.83, and might be worth pointing that out too, Meghan, that by it being Good Friday, markets didn't trade today, so I'm using Thursday as kind of my week over week baseline. Choice box beef was actually down. This was kind of the one somewhat of an outlier, but still a good price, but down about $5 on the week, came in at $331.52. And then May feeder cattle futures, I grabbed May because we've already kind of started we're in the last, where there's 4 more trading days before we actually settle the April. So I'm going to use May as my indicator, but May futures were up by $8 this week. May feeder cattle futures at $286.85. Rolling on to hogs, national base hog carcass price was down by a little more than $1, $84.13 for the week. Pork cutout values up about 6%, 97.97, some strength there. And then May lean hog futures were up about 4% for the week, closing yesterday at $90.40 per hundredweight.
I want to talk a little bit about this volatility that we're seeing right now in the cattle markets. Obviously, we had the tariff conversation a couple of weeks ago, a little bit of sticker shock in what happened at the end of that week. We saw things have a slow start last week, and this week we've been back and off to the races. As you look at this peaks and valleys and with what is happening in the cattle markets, what are some things to consider, and maybe when it comes to keeping an even keel in navigating the volatility?
Well, of course, that's a challenge, obviously, to kind of stay calm in the midst of the storm. But we've certainly seen prices be very volatile. We spent a couple weeks, frankly, trying to, I think, process, as we got closer to implementation of some of the tariffs and whatnot. And then when we got to the brink there, we saw a lot of movement. And then, once the pause was pushed on the majority of those, then we saw things really move right back. And I kind of scrolled through my price series, and a lot of these markets are back where they were a few weeks ago, which I think is telling. That's happened multiple times. And I don't want anybody to hear me saying that I think this is the top. I'm not saying that per se, but what I'm saying is we've had multiple opportunities to recapture some of these prices that appeared to have gone away at one point. This may have been the 3rd time this has happened. It's kind of hard to remember, to be honest, Meghan. But, we've seen some pretty sharp pullbacks, but then we've also rallied back to about where we were. So I do think it's worth pointing out that we've had multiple chances to do something to protect ourselves at some of these price levels, and we're there again as we record this on April 18th.
When we talk about just kind of the tariffs in general, and we've kind of examined this and for several different weeks as we've seen all of this unfold, how concerned are we with the fact that we're seeing a pause in other parts of the world, but we're not seeing that with China in terms of, I think about pork consumption, think about beef exports. How worrisome is it that we're going to continue down this road with another global powerhouse?
Well, I think it adds to the uncertainty for sure. Let's kind of start, I guess, with the first point, I guess, which is the direct impact. And China is a significant market on the beef side for us. It would be our 3rd largest export destination. Now, for some perspective, in 2024, we moved, I think it was 1.6% of our beef to China. So, that certainly matters, but I think framing it that way may help a little bit as to how significant that market is. It absolutely matters, don't get me wrong. But 1.6% of our beef in 2024 went there. China is obviously a big pork consumer, also a producer, so they come into play there as well. There's, with any of these tariff discussions, there's multi levels. And I think asking the China question is important because it really does matter country by country and trading partner by trading partner. But you've got the direct impact. How does it impact the flow of exports to that country, or in some cases imports from, which doesn't really apply in this case to the beef or hog markets. And then you've got some spillover effects across species, right? Even if beef is not as impacted as pork or poultry, there's some spillover substitution effects that matter. And then as we start thinking about potential for broader trade disruptions, and you start thinking about potential for things like, more widespread inflation and impact on jobs and consumer spending, to me, that's the other impact, right? There's the direct trade impact, but then there's the potential impact that it can have on demand if we get to a point where it actually is really impacting consumer disposable income somehow.
Is there also concern about lost global market share, right? In that big picture, that we may only export a sliver, but that they end up going somewhere else, and how hard it is to get those market shares back?
Sure. That's definitely consideration. I think that's exactly what will happen, and probably is happening. Frankly, is there's other countries that'll step into that. The other thing about China that I need to make a point about that I probably should have opened with is we can talk about how much of our beef went there in 2024 and how much is gone in 2025, but it's also worth pointing out that particular market is likely a growth market, right? So it's as much about the future and what can go there as incomes increase in that country and they add more expensive proteins to their diet. There's a longer term play that absolutely matters. And I think that's kind of where you're going, Megan. That's a good point.
There will be plenty for us, I think, to talk about in this space for weeks and months to come.
Undoubtedly.
All right, let's take a look at slaughter. There was some slaughter that happened today. Obviously, I'm assuming, going to look at numbers much lower this week with a lighter Friday and a lighter Saturday in play as well.
So running through the numbers, actually, cattle slaughter was up just a little bit. Now, last week was down a bit too, but 567,000 for the week. For a little bit more of a year-over-year perspective, down 5% year to date. Hog slaughter down 4% from last week, 2.38 million head, and that's down 3% year to date as well. I've been a little surprised, and I guess we'll get a little better feel for slaughter next week. But we've been running a little bit more below a year ago than I would have guessed across a lot of these markets, Megan.
Does that, and obviously we'll talk about that next week, right? Because livestock slaughter monthly numbers come out from USDA then. But how much is that coming into play? Does that kind of show where we are in terms of market-ready animals, how much we've pulled ahead, and maybe what that implies for supplies long-term?
I think it speaks to some of that. The other thing is, that's, what I just rolled through with you is kind of that weekly broad cattle slaughter number, right? And what that doesn't do a really good job is breaking out where that comes from. And I've really been surprised at what I've seen so far, how much cow slaughter has been down. So I think that's a big reason that we're down that much. Something that we'll know a little bit more about. I guess that report comes out early next week. I can't remember if it's Monday or Tuesday. But, you'll be able to actually look at, steer and heifer slaughter. And that to me is interesting as we think about how that might break out between the two genders, because both, all that's going to matter in terms of slaughter.
All right. The big report out this week, cattle on feed numbers from USDA. As you take a look, let's start with inventory and kind of go from there.
That sounds good. Let's do the big three, and then we'll talk more about the steer heifer mix if that works. So I'll kind of start there, and you can jump in any time. But big picture, on feed inventory came in about 1.6% below a year ago. That was pretty close to pre-report expectations. Marketings for March were 1% higher than March of 2024. The number that I have, watched a lot of people have really for about the last year now is placements. So our March placements were up 5% from last year. That was within the range of expectations. It wasn't outside the range, but it was on the upper end of that range. I'll make a couple of comments there. I think March 2024 was a bit of a slower placement month, so you're comparing to that. Weather wasn't ideal in February, and I'm just saying that because you may have had, some delay, if you will, in marketings. And then, we had some pullback in price in the first part of April, but these are March placements. I think we got to be aware of the fact that, strong prices in March may well have pulled some cash forward. So on one hand, it seems a little surprising, that we're running placements 5% higher, but again, it was kind of anticipated. And I think you can kind of tell a story as to why that occurred in March of this year.
When you look at the range, because it was it was a very wide range from what was it, 97 or 98 to almost 107?
Yeah.
Can you talk a little bit about how that we get to these, one, where pre-reports are, but then what the actual numbers are? So how those guesses come in, and then how that kind of stacks up, just to maybe give a little background for those who may not understand when we talk about pre-report expectations compared to where things actually are.
So there's a large number of analysts that make a lot of those that get used in those pre-report estimates. They're looking at different things. Obviously, they have kind of, some sort of model typically that they're using of how many cattle are outside of feed yard potentially to be moved. They can look at receipts in yards. They can look at the number of cattle that are, for example, that enter into the calculation for the CME feeder cattle index, for example, and things like that. So you're kind of tracking, what movement that you can, and you're watching other patterns, and and you're making as educated guesses as you possibly can based on those data points. And then, of course, you asked about the actual numbers too, Meghan, that USDA puts out. And those are survey-based, right? They survey feed yards with capacity of 1,000 head or more, which is a good chunk of our total on feed numbers. It's over 80%. I calculate that once a year. I think it's somewhere in the mid to upper 80% of total numbers. So that's survey-based. So, it's also an estimate with a range, of around it, of course, but it's ultimately based on what folks are reporting from actual cattle on feed.
So the interesting thing about this report is that once a quarter, we get percentage of heifers that are in that mix of cattle placed or cattle in feed yards. When you take a look, so this is March data, so we have that for this month. As you take a look at that information, what do you see?
So let me start with, just the big numbers. So steers on feed were essentially unchanged from last year. So I'm going to kind of start there as kind of our baseline. If you look at the number of heifers estimated to be on feed April 1 of this year versus last year, that was down 4%. So that's noteworthy. Now, the way that I like to think about this, and most folks do, and we've done this, I think you've probably done this every single quarterly report that you've talked about, Meghan, with one of us, but you look at what percent of on-feed inventory is heifers. In expansionary times when we're holding back a lot of heifers, you tend to see that in the low 30%, so south of 35%. We've been in the upper 30s. We've actually been above 40 the last couple of years a few times. So heifers as a percent of total on-feed inventory as of April 1 of this year, forgive me for the precision, but 37.6%. And I wanted to be kind of precise about it. So it rounded to 38% in the report, but 37.6. To put it in perspective, that's about 1% lower than January of this year, and also about 1% lower of April 1 of last year. So that percentage is creeping down, although it is doing so fairly slowly.
But when we look at it in comparison to normal times or in growth or expansion mode, we're still well above that threshold.
It definitely doesn't suggest to me that we're holding back a lot of heifers at this point, not enough to think about flipping the switch on expansion. it may suggest, like we've talked about, that liquidation may be starting to slow to some extent, but it certainly does not paint a picture of a widespread heifer retention.
I feel like we are at a disservice when livestock slaughter and cattle on feed don't come out in the same week, because you don't have that number, because we talk so much about beef cow slaughter, right? In that percentage to have an accurate or a close comparison. That's out next week, and we can talk about that just in a little bit. When we think about getting to flipping the switch, or maybe slowing down even more um, in contraction or in non-growth mode, I think about weather. We're obviously saturated here in this part of the world, but that's not the case in other important parts of cow-calf country and in cattle raising areas. How much is that going to come into play this year?
When I talk about this in extension settings, Megan, I like to say profit can't make it rain, right? And it doesn't matter how high calves get or how attractive things look. If the forage isn't there, whether that be for grazing or for winter feed, it's hard to grow a cow herd. So, to me, it's almost a necessary, but not necessarily sufficient condition to see growth. Now, having said that, I think if weather cooperates this year, I do think we'll see heifer retention, but I don't think we can see a scenario where without weather cooperating, we do.
And it's already really dry in parts of the country.
And it's early to be dry, right? It's one thing to have a lot of dry places in July. It's not so common in April. So, yeah.
Well, we have plenty of times to have conversations coming up about what this cattle herd is doing and where maybe it's headed through the rest of 2025 and into 2026.
It's going to be an interesting year, to say the least. The good news is prices are pretty strong. So that's the good news. Supplies are tight, prices are strong. So we start from a position of strength, and then we deal with the uncertainties ahead.
Before I let you go this afternoon, livestock slaughter is out next week. Cold storage is also out next week. What are you looking for most, specifically on the livestock slaughter side of things?
So in terms of livestock slaughter, obviously, we've talked about cattle and hog slaughter both running quite a bit below year-ago levels so far, and I think we'll get a much clearer picture of that, because that report that comes out next week will be the first quarter, right? It'll be January through March, and it'll be more specific. So there's the overall number. The other two things I'm interested to look at. The first one, frankly, is going to be beef cow slaughter. I really want to know: are we still running as far as we have been below year-ago levels? And we pulled cow slaughter back quite a bit in 2024. So to be down a lot from that low number, to me, really does tell a story. And that in and of itself tells me that we're likely to see. When you think about that with the heifer numbers, right? It tells me that we're probably, not going to see a major change in cow numbers this year, just because I think we'll see down a little bit to mostly flat. The other thing I would mention too is I like you'll get that steer heifer breakdown in that slaughter report, and we can talk about, for example, today we talked about heifers on feed, right? But there's different points that we can catch heifers in the system, in terms of data. So talk about heifers on feed, talk about heifer slaughter, but just female slaughter in general always tells a story about what's happening with the cow herd. So I want to look also at just that steer heifer mix, because the difference between steer slaughter and heifer slaughter compared to a year ago says something about how many heifers are being pushed through the meat system.
And I would assume a little bit with cold storage demand, how long and how resilient that has been on the protein side of things.
Cold storage it's a supply measure, and it tends to paint a bit of a picture about how plentiful or lack of we are with certain meats. So, we've generally been running below year-ago levels on most meats, which makes perfect sense because we know supplies are tight. So if we started to see that change, over time, then that would suggest that perhaps we're seeing some pushback. And if that were the case, we would expect retail price to adjust. But Truth of the matter is, demand has been strong, and consumers have been paying a lot for these meats, and that's something that we can talk about a great deal, but it matters in this market.
Kenny, it's great to catch up with you.
You too. Good to visit with you.
To have our weekly livestock market update delivered to your email box every Saturday, go to brownfieldagnnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.